Hey guys, Jonathan Rose, and I want to show you a really easy way to find support and resistance once the market starts to move. So yesterday we had Fed, the Dow was down 150 points, today it's down 150 points. S&P futures looking on a weekly, we want data. As I open it up, last week's low, 28.99. The previous week's low, 28.95. Last trade, 29.03. Let's watch the market as we get to this key level. 28.99 is going to be major support, last week's low. It's always going to be support. Whether that's the low of the day or whether it just bounces, who knows? But it's definitely going to have trouble getting through there. So let's go to a 1 minute and let's watch this together. Because what I want you to see, right around that 2,900, we're going to bounce. A really good trade, especially what floor traders would do, buy with a stop under last week's low or maybe even that previous week's low. So it's on a 1 minute. If it'll help, I'll draw a little line here just to show. Let's let it run, but the market should bounce. If it doesn't bounce, guys, weak, because that's going to become resistance. But I have a pretty good feeling we're going to bounce. How high we go, who knows? Very good chance that just becomes the low of the day. So let's watch it. Let's see what goes on. So we're exactly 1 hour after the start of the video. And so obviously I increased the speed so we're not sitting here for an hour watching a video that we can just do in a couple of minutes. But hey, an hour later, 29.11, it traded up to 29.12. The low is 29.01. It looks like here it tested again, 29.01. Remember last week's low? 28.99 and then 28.95. If I put it back on a weekly, you can now see that this week's low is darn close, pretty much the same as last week's low, only about $5 off the previous week's low. So the overall message is this is a really, really easy way to follow the market. It's something that all traders need to be attentive to. Now, does that mean the S&Ps are going to rally and start taking out their highs? Absolutely not. But what it does mean is this is a very, very actively followed level. Shorter term traders, if you can put a trade on with just $5 of risk, just a stop of $5 to potentially make open-ended on the upside, that seems like a pretty good do. A great approach is if you bought 2 S&P futures or 10 S&P futures, 2903, 2902. Well, take off half right here. If you take off half right here, if the market continues to rally, you're happy, right? You're stoked. But if the market goes down and comes back down here to the support, buy those back. So again, you'd be long 10 because you sold 5. You buy that back right there. Same position. Do the same thing all over again. I wouldn't be surprised if it goes down there and tests it. I'm guessing it holds, but if it doesn't hold, expect that 2,900 level to become massive resistance. Just like right now, it's massive support. Keep it simple, guys. You can see, very, very, very basic. Just make sure you're in front of those weekly highs and lows. My name is Jonathan Rose. I'm the owner of Masters in Trading.